This is the Energy Makers Show, featuring the innovators, financiers, and policymakers focused on the global energy demand. Brought to you by NRG, moving clean energy forward. And here's your host, Paul Dickerson.
Hi, I'm Paul Dickerson, and welcome to another episode of the Energy Makers Show. First up, June Ressler, founder and CEO of Cenergy International, a 17-year-old oil and gas services company providing experienced personnel in the upstream sector. Next up, Eric Dulany, National Energy Practice Leader at BKD, offers a session with Shane Torkelson, Senior Managing Consultant with BKD, and John Tangredi, Division President at Insperity, discussing expense control in the oil patch. All that right after this.
At BKD, we understand the constantly shifting nature of the energy industry. As a national CPA and advisory firm, we serve energy clients from the beginning to the end of the cycle. Our experienced energy advisors serve approximately 300 energy companies in exploration, midstream, downstream, oilfield services, and power production. Plus, we're the largest North American member of the Praxity Global Alliance, which means we can help you wherever you operate. Contact a BKD advisor or visit us online to learn more.
Welcome to another episode of The Future of Water in Unconventionals, brought to you by IHS and CAP Resources.
Hello, I'm Aaron Horn with CAP Resources.
And I'm Sarah Fletcher with IHS.
The topic today is regulatory oversight over water management related to unconventional plays.
Regulation in the oil and gas industry is rapidly changing, and most of the activity is happening at the state level, but there's a lot of federal environmental regulations that come into play also. And there's been recently a lot of discussion about who should be regulating and also who can be regulating.
There are two states that highlight the differences in how states approach water management. The first is Pennsylvania, where the Department of Environmental Protection requires that operators track their wastewater, report where it comes from and where it ends up going. And that's a step change from what states had done previously. And it's driven by different factors. One being that the state of Pennsylvania, it's a little different environment for operators there, and it's new to the state. The second state that I'd highlight is Texas, where legislators, as opposed to regulators, are introducing bills that would promote water recycling. In other words, taking wastewater and reusing it over and over again, as opposed to using more fresh water from the local environment.
That's a great point, and I think we'll see a lot of other states following the lead that Texas and Pennsylvania have set, some being proactive about the regulations that they implement and others being more reactive to operational changes that are occurring.
So the regulatory environment regarding water management continues to evolve and change. Check back for more on water management and market opportunities.
And for more information on water management strategies and water market opportunities in the continental U.S., go to ihs.com/waterunconventionals. This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now back to the Energy Makers Show with your host, Paul Dickerson.
Welcome back to the Energy Makers Show. Our guest now, June Ressler, founder and CEO of Cenergy International. June, welcome to the program.
Thank you.
So tell us about Cenergy.
Cenergy is an oil and gas service company. We provide personnel with a lot of expertise to the oil and gas industry.
And what types of positions are you filling?
Almost anything that our client needs, but we really work more heavily on the operational aspect of upstream. So it's geologists and engineers, but also rig supervisors, drilling site managers, that type of thing, geologists and geophysicists.
All right, well, clearly you're attracting talented people, but it almost seems like you're competing against your customers.
That's not true. A lot of our consultants are retirees. They start early in the oil field. They retire in their mid-50s, and they've got a good 30 years left of work, and they really want to work as independent consultants, make bigger dollars, and be able to run their own kind of company. And most of them don't want to be hired on or rehired on, so they like to be independent.
All right, so are you a consulting company? Are you a temporary placement agency? Tell us a little more about the model.
So we're in between a temporary service, a temp company, and a headhunting company, in that we've got we provide people with a particular brain. They have a certain knowledge of a certain drill or a certain knowledge of an engineering type of drill that we find for our clients that have, there's all different types of drilling. Land is not like offshore, and there's a million different types of land. Could be deep water, high pressure. Right. So we find the specific types of people that are knowledgeable about that type of drill. And then these people might stay with our client for a while and go from project to project, or they'll be on a project and then they'll leave. But it's not a temp, and they're not there permanently.
Well, and you've been around for how long?
17 years.
Fantastic. Well, what differentiates you from some of the other from the competition?
I believe our safety and our safety record, since we take safety so seriously. I've got an entire staff of safety people, managers all the way down. We onboard our consultants as if they are our own employees,
sure,
safety-wise, and we don't send anybody out into the oil field unless they're completely safety checked.
Well, tell me about some of your clients. Are these mid-size oil and gas companies? Are these the majors?
We do business with all different sizes. Most of our businesses with the larger oil and gas companies.
Well, I love speaking to folks in the personnel business, because you truly have sort of that leading indicator view of where we're going, right? And who's hiring and
That's
who isn't.
Absolutely true, yeah.
Can you walk us through some of the trends that you're seeing?
With the unfortunate event of Macondo a few years ago, right, there was a mass exodus out of the Gulf of Mexico. Right. We do business around the world, but a majority of our business is in the United States. So then at the same time, the Marcellus Shale and the shale plays all around the United States started opening up. So we had a lot of people coming from offshore onto drilling on land, right, a tremendous amount of people. And because of the price of gas in the last couple of years is slowly declining, and the Gulf of Mexico has opened up again, now we're having another mass exodus onto offshore drilling again.
So what does 2013 look like for you?
We've been growing like crazy. So 2013, as usual, we're growing, but I think we're probably going to only grow about 20%. So it's been kind of boring this year for me.
20% is boring?
Yes.
That's a good place to be. Well, yeah, it's an exciting business. Thank you so much for coming by today.
Thank you so much for the interview.
And that wraps our discussion with June Ressler. We'll be back with more right after this.
Hi, I'm Russ Capper, and welcome to the premiere edition of The Drilling Bits, brought to you by Sikich. And I'm joined by Greg Price, the author of The Drilling Bits. Greg, tell us about Sikich.
Russ, thanks for having me here on The Energy Makers.
You bet.
Love to tell you about Sikich. Sikich is a national firm, about $100 million in revenues, provides all the traditional CPA services, and then you throw in a couple of little jewels. One would be information technology, which is what we focus on. And the other segments would be, there's an investment banking arm, there's a recruiting arm, there's a marketing and public relations arm, and there's also an arm that specializes in what I might call the hosting business. So we have a wide variety of services that we perform, and Sikich has traditionally been in the Midwest, but they also recognize that the growth and opportunities that exist in Texas, and we're their first foray into the great state of Texas.
Sounds interesting. Tell us about the Drilling Bits.
Well, the Drilling Bits is an opportunity for us to talk about what's going on, particularly in Houston, Texas, and in our region. Everyone knows that Houston is about energy, and we wanted to take the opportunity to focus more on what's going on with the energy sector of the Houston economy, and therein came the blog, which we call the Drilling Bits, which you can find at sikich.com/blog. Look under Energy and Oilfield Services, it'll be right there. And the Drilling Bits is really a blog that has information about the industry, some editorial opinions, some creative information about things that are going on in the industry that maybe some people don't know.
All right, and you're mainly focused on the IT world.
We are. That's where we're going to be focused, but the Drilling Bits has a broader base of information. We want that to be a place where anyone who's an energy executive checks in on that 2 to 3 times a week. We've got some really great content out there. We've got some very, very interesting stories. The train derailment in Canada, we actually have the background on what happened there. A lot of people don't know exactly what happened, but we have that story. And we have some comments about U.S. energy policy, or the lack thereof, as one might say.
Really cool. All right, and that wraps up the premiere edition of The Drilling Bits with Greg Price, brought to you by Sikich.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now, back to the Energy Makers Show.
Welcome back to the Energy Makers Show. I'm Eric Dulany with BKD, and the topic today is expense management in the energy industry. With more cash spent ever on developing the shale plays in the U.S., there's a big emphasis today on controlling our expense management process. So today with me, I have John Tangredi, Division President at Insperity Expense Management. Welcome to the show, John.
Yeah, thanks for having me, Eric.
And also we have Shane Torkelson, Senior Managing Consultant at BKD in our Enterprise Risk Solutions Group. Welcome to the show, Shane.
Thanks, Eric. Glad to be here.
John, why don't you start off by telling us a little bit about Insperity?
Okay, thanks, Eric. Insperity's been in business for 25 years. We have over 2,000 employees, and we have offices in most of the major markets in the United States. And our real focus is to help companies to run better, grow faster, and make more money.
And I understand you have a pretty cool expense control solution.
We do, and I'm excited to talk about it today.
And Shane, tell us about your group.
Enterprise Risk Solutions is a group within BKD of about 50 professionals whose sole focus is to concentrate on identifying and monitoring risks within an organization. Within ERS, we've got 3 different disciplines that we help companies address risk. One is traditional internal audit services, another is called IT risk services, and then our third discipline is called forensics and valuation services.
So let's dive into the issues that you guys are seeing at your clients. And I think, John, we'll start with you. You've identified these in 3 buckets, right?
Yeah, Eric, there's 3 main areas that we find that companies struggle with when it comes to expense management. The first one is their spend policy and the enforcement of that policy. That's number 1. The second is front-end control on how their funds are distributed into the field for their mobile workforce that has to spend dollars in association with how they perform their day-to-day operations.
Right, and the oil patch has changed quite a bit over the last 7 or 8 years, hasn't it?
Is. I think it's redefined mobile workforce.
Right.
Really. The third area where companies need to focus and usually struggle with is having timely and accurate information about the spending from which they can make smart business decisions.
Tell us about some of those controls that you see at your clients.
I think if we all had our preference, we'd love to have the front end or the preventative controls to mitigate the risk before it ever happens. But as far as controls I'm seeing out in the field, I think what I most commonly see, and I say common, but it's also a best practice, is the old 3-way match. A lot of companies are requiring that before they will pay an expense, that there's got to be a 3-way match between a requisition, some sort of receiving document, and the actual invoice, right? And then as far as employee expense reimbursement, what I'm starting to see out in the field as far as a best practice is a lot of companies are starting to require a secondary mandatory review in which that once the employee submits their expense to their supervisor, they're accountable for reviewing that, substantiating it, signing off. But then they also have to send that into accounting, who's going to do a second review and put it through the same rigor. And I think that mandatory second review kind of serves 2 purposes. One, it's going to catch things that might have fallen through the cracks in the first place. But the second thing is the deterrent, because if I'm an employee and I know my expense reports are going to be looked at not once but twice, I'm going to be a little bit less apt to work outside of the box.
And then you're talking about collusion at that point.
That's exactly right.
So what you've talked about, 3-way match, dual signatures on an approval of an invoice, for example, those are all after the money's been spent.
Right, those are all detective, and we are starting to see some companies that want to move, I guess, up the spectrum a little bit as far as improving their risk profile and managing risks. And one way they're doing that is they're trying to implement more front-end or preventive controls versus the traditional back-end.
Which is a great segue to John and the solution that you offer your clients. So let's talk about that.
What we have come up with is a combination of technology and a financial mechanism that's backed with MasterCard to control how funds are not only distributed but used in the field by the mobile workforce. So we have a reloadable debit card that is backed by MasterCard. And one of the things that it does is it allows for companies to control how much money is put onto that card and the frequency at which they are going to require controls around the spending. So for instance, if somebody's going out into the field, the card can be loaded up with any amount of funds that might be everything that employee needs for the entire week. But for a company that wants more control, the amount of funds that are put on that card can actually be monitored, and decisions about that can be made with every single purchase. So really depends on how much control a company wants.
Let's do a practical example around this. So let's say I'm working on a rig in West Texas somewhere, and one of my expensive tools just broke, or I forgot to pack it up right at the last site, so it fell off the truck, and I need this for the next job. So explain how that works when I go about going to the store or going to the distributor to go get it.
Well, in the format that would give the greatest amount of control, what you would do is you'd pull out your smartphone, open up the application that the card is associated with, and you would make a funds request. So you would put in the amount of money that you need, what the purpose of it is for, which merchant you're going to spend it at, and you would simply hit submit. That would automatically get routed to your approving manager. Your approving manager would get a text alert or an alert on their smartphone that they have funds that need to be approved. They will be able to look at the data. If they have any questions about it, they can give you a call or they can send you a text until you both agree that this is spending that should take place. And once that happens, they simply hit approve, and within 30 seconds, the funds can be on your card that you're holding in the field, and you can use that at any merchant that accepts MasterCard.
And what does management see as the benefits of using this tool?
Well, this is really exciting because by using this tool, we're seeing examples of where expenses are reduced by 20 to 30%.
Wow.
And that's very different from typical expense reporting automation that usually just has an ROI that's associated with the labor that is involved in processing expense reports. This is true savings.
Right. So, we talked some about how kind of it works on the front end, on the buying side, but on the back end, management groups really like this, and talk to us about why.
One of the things that it does is it gives the companies the ability to track all the spending very well, because we bring all the transaction data automatically through a very, very robust reporting system. So they get that great visibility. But the other thing is that it changes the psychology of how people spend money in the field.
Right.
And one example that I've heard someone use is that they really have to think about it beforehand. It's almost like asking your parents for money. So you give thought to, is this the right amount of money that I should be asking for, and is the purpose correct beforehand?
Except it comes into your account in 30 seconds, whereas a parent decision might last a month.
That's right. Yeah, it can be instantaneous. And again, it doesn't have to be that regulated. For employees that companies want to give more leniency to or trust more in the field, they can have the card loaded up with money for the week or for the month, and we can do replenishment thresholds. So it's
very customizable.
Very customizable. What we want to do is we want to make sure that it works for how an individual company manages their operations.
Shane and John, thank you so much for your input today.
Thanks for having us.
And that concludes our discussion on expense management in the energy industry, and that concludes this episode of The Energy Makers Show, heard on the radio and seen at TheEnergyMakers.com.